Hey everyone, I'm Divya Grover, here to help you take informed mutual fund investment decisions. From global uncertainties to domestic factors, multiple variables are influencing the markets. Naturally, the last few months have not been great for the Indian equities. We have seen high volatility driven by expensive valuations, muted earnings growth, and uncertainty around tariffs on US exports. And more recently, the war in the West Asia has added to this uncertainty, leading to market corrections. Now, looking ahead, there are some supportive factors. Government measures like GST rationalization, a continued emphasis on infrastructure growth, and job creation could help stimulate domestic demand to some extent. At the same time, strong buying by domestic institutional investors and steady SIP inflows are also positives for the market. But risks still remain. Geopolitical tensions, trade protectionism, currency fluctuations, and foreign investor outflows could continue to keep volatility elevated. So, if the market continues to remain volatile in 2026, large cap funds may show relatively better resilience compared to mid and small cap funds. Ideally, large cap funds can form part of the core equity portfolio for many investors. That's because they predominantly invest in market leaders which have the potential to generate relatively stable returns across different market phases. They are also generally less impacted by economic slowdowns and market corrections. In this video, we will look at the top 5 large cap mutual funds based on risk adjusted returns. These schemes have been shortlisted using a combined quantitative score which includes 6-month, 1 year, 3 years, and 5 year rolling returns, along with risk reward ratios like standard deviation, Sharpe, Sortino, and up-down capture ratios. Let's break them down. First up is Nippon India Large Cap Fund. Launched in August 2007, this fund focuses on fundamentally sound large cap stocks along with some tactical exposure to mid cap segments. It prefers companies with established business models, sustainable free cash flows, reasonable valuations, and strong return on equity. Over the last 5 years, the fund has generated a CAGR of 24.5% on a rolling returns basis compared to 18.1% for the Nifty 100 TRI index. Its top holdings include HDFC Bank, ICICI Bank, and Reliance Industries. And sector-wise, it is tilted towards banks, auto and ancillaries, and infotech. Next, ICICI Pru Large Cap Fund. Launched nearly 18 years ago, this fund has built a presence in the large cap category with consistent long-term performance. It focuses on high conviction investments within the top 100 companies listed on the NSE, especially those available at reasonable valuations. In the last 5 years, it delivered a CAGR of 21.7% on a rolling return basis compared to 18.1% by the benchmark. Its top stocks include ICICI Bank, HDFC Bank, and L&T. Its key sectors exposures are banks, auto and ancillaries, and crude oil. Moving on, we have DSP Large Cap Fund. Launched in March 2003, this is a benchmark agnostic fund that maintains a relatively focused portfolio of around 30 stocks. It follows a blend of growth and value investing to identify high potential opportunities across sectors. Over the last 5 years, it has delivered a CAGR of 19.1% on a rolling return basis compared to 18.1% from the benchmark. Its top holdings include HDFC Bank, ICICI Bank, and ITC. And sector-wise, it is largely exposed to banks, auto and ancillaries, and insurance. At number 4, we have Invesco India Large Cap Fund. Launched in August 2009, this fund invests in a diversified portfolio of large cap stocks with a preference for growth-oriented companies along with some value opportunities. It looks for companies with strong execution capabilities, competitive advantages, and potential for return on equity expansion. In the last 5 years, the fund has delivered a CAGR of 20.2% on a rolling return basis compared to 18.1% by the Nifty 100 TRI index. Its top stocks include ICICI Bank, HDFC Bank, and ICICI Pru AMC. Its key sectors are banks, finance, and auto and ancillaries. And finally, we have Adete Birla Sun Life Large Cap Fund. Launched in August 2002, this fund has built a long-term track record of consistently outperforming the benchmark. It aims to keep sector allocation broadly aligned with the benchmark while retaining flexibility in the stock selection based on the fund manager's conviction. Over the last 5 years, it has generated a CAGR of 19.6% on a rolling return basis compared to 18.1% by the benchmark. Its top holdings include ICICI Bank, HDFC Bank, and Reliance Industries. Its sector exposure is mainly towards banks, infotech, and auto and ancillaries. To sum it up, over the last few years, mid and small cap stocks have seen a strong run, leading many investors towards the relatively higher risk investments. However, large cap funds consist of well established companies that can offer relatively steady returns over the long term. While they may not offer very high upside potential, they can provide better stability and downside protection compared to mid and small cap funds. That said, large cap funds are not risk free and are still subject to market fluctuations. So, when considering them, it is important to focus on schemes with a well established long term track record of reasonable growth. For more insights on mutual fund investing, subscribe to the Equitymaster YouTube channel. Happy investing! Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, enlistment as RA and IA with exchange, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.